Palantir just reported their latest quarterly figures, and it was an amazing quarter. We got what we wanted or what we expected to justify or to try and justify, let's say, today's price. Right? We were mostly expecting or wanting 30% revenue growth, and that's exactly what we got. We also wanted increased guidance, and that's also exactly what we got. Now, currently at the time of making this video, the stock is up 12.8%, reaching new all-time highs at $46.71. The last couple of days, if you've seen the preview video, you know that the stock has gone down by around 8% or so in the last 5 days. Now, before jumping into the numbers, into the quarter, by the way, for those that joined the live stream with Amit, with Arnie, with Emir, thank you very much for joining. We're going to do this, of course, more and more. But just for the sake of this video, just look at the analyst expectations for Palantir, right? This is not updated numbers yet. Fiscal year 2024, sales growth, 24% year-over-year growth, reaching $2.76 billion. We know that now from the updated guidance, we know it's going to be more than that, and maybe they'll even beat those numbers, so maybe it can be even more than that. But these estimates have always been low, right? Fiscal 2025, 20.4% year-over-year growth. Then fiscal 2026, 20% year-over-year growth. I mean, it's nice and all, but we knew that it's going to be more than that. Free cash flow is also exploding. It's now expected to be adjusted free cash flow for the year, exceeding $1 billion and growing quite fast as well. I mean, this is a company that is now back in full-on growth mode, while not really spending that much more than before, right? This is an AI play. Without having to buy billions of dollars of NVIDIA GPUs, building out data centers, building out maybe nuclear reactors or whatnot to make sure that those data centers work, right, energy-wise. No, this is an AI play that has solutions today, software that works today, does not really focus on one specific LLM, one specific chatbots. No, those things are commoditized. It's actually what's underneath it that should be working. And that's where Palantir comes in, right? We've talked about the ontology. We will be talking about warp speed as well, the operating system for manufacturing. So this is where Palantir starts to flex its muscles even more. We're going to go over all the numbers. My thoughts here are probably going to do a part 2. I have to go over the transcript from the call because I'm sure I missed some stuff. So we're going to do a 2-part series. So before doing that, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We really appreciate that. Trying to reach 60,000 subscribers by the end of the year. Let's try and reach that. We're not that far away, plus we have some time, so hit that red button below. And if you want to support me even further, do check out the link down in the description and in the pinned comments with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Oh, and as always, just for the sake of the science here, the average analyst price target before the earnings report was 31.8% lower than the price it was at before the earnings report came out. All right, so let's first start with a quote here by Alex Karp. We absolutely eviscerated this quarter, driven by unrelenting AI demand that won't slow down. This is a US-driven AI revolution that has taken full hold. The world will be divided between AI haves and have-nots. At Palantir, we plan to power the winners. More on that later on. This is a great overview by Brad, stock market nerd. You've probably seen this overview in the video, especially in the earnings season. It's a great summary of what happened and what the analysts were expecting, what the market was expecting. So here, beats across the board. And so revenue growth year over year reached 30%. Income from operation, 16% margin. Adjusted income from operations, 38% margin. Cash from operations at 58% margin. Adjusted free cash flow margin of 60%. That's amazing. Net income attributable to common shareholders, margin of 20% there, $143.52 million. GAAP EPS this quarter, 6 cents, adjusted EPS of 10 cents, and adjusted EBITDA margin of 39%. That was the main overview. And by the way, if you want to exclude the SPACs, they call it here the strategic commercial contracts, revenue grew 32% year over year. As always, they start off with showing us a couple of examples, right, of customers in different industries. So you've got here prototype to production, accelerating the US commercial customer journey. You've got here one, a bottled water manufacturer, 50 days to a 7-figure ACV deal. Then you've got a healthcare provider, 3 months from client inbound to 7-figure ACV deal. Then you've got an agriculture software provider, under 2 months to 7-figure ACV deal. And this is a quote by the famous cyclist: "It doesn't get easier, you just go faster." Basically, when you're a cyclist, when you become better and better, it's not that you don't feel the pain. No, you feel the pain, you can deal with it better, and you're going faster and faster. Moving to US commercial, so we've got US commercial revenue increasing 54% year over year. Last quarter, that was up 55% year over year, okay, but we are seeing here an increase of 13% quarter over quarter. Previously, that was 6%. US commercial customer count is up 77% year over year and 9% quarter over quarter. As for US commercial remaining deal value, that's up 73% year over year and 7% quarter over quarter, slowing down from Q2 a little bit, but US commercial deals closed is at 130 compared to 123 last quarter, and that's up 27% year over year. As for US commercial total contract value, we're sitting here at $297 million. That's up from $262 million last quarter, so we're up 13% quarter over quarter. As for US commercial revenue growth, that increased 54% year over year. As for US government revenue growth, that increased 40% year over year and 15% quarter over quarter. Commercial revenue growth overall is up 27% year over year, and government is up 33% year over year. Remember, as we exited 2023, they told us in 2024, government revenue is going to reaccelerate. The market was not believing it. We've been talking about that. We've been talking about that during live streams as well. And that's exactly what has happened. Government continues to grow very, very nicely and continues to accelerate as well. I expect that trend to continue as a bigger chunk of the defense budget gets spent on software. Looking at the total deals for a quarter, so 104 deals of at least $1 million. Last quarter, that was 96 deals. We've got 36 of which are at least $5 million. That's up from 33 last quarter. And then 16 of which at least $10 million. That's down from 27 last quarter. But still, the trend is going up. 96 deals, we're now at 104. They ended the quarter with $4.6 billion in cash, cash equivalents, and US Treasury securities, and no debt. That's up from just over $4 billion last quarter. I mean, if you were Palantir's management, what would you do with all that cash? Would you buy back shares? Would you invest more in the company, sales teams? Would you maybe invest in companies like Anduril, for example, take a stake in that company? What would you do with all that cash? Because, I mean, their profitability profile is quite good, right? Here, cash from operations has a 58% margin, adjusted free cash flow a 60% margin. That's up from 25% a year ago. Now, if we look at total RPO, short-term, long-term, and billings, we can see the following things. So total RPO, a year ago, we were growing quite fast, Q3 to Q4, 25.2%, but then we saw a huge slowdown, right? 4.8% growth, 5.3%, and we're now growing 14.6% quarter over quarter for total RPO. So that's great news for what's expected in the future. As for billings, it shows us already right now the strength of the company here, 2 quarters already, over 14.5% quarter over quarter growth. And total net retention was 118%. Also, we are going into the right direction. We've bottomed at, what was it, a couple of quarters ago, 107, then 111, I think, and now 114, 118. So definitely growing and going into the right direction. And to be honest, I mean, if you look at the year-over-year revenue growth for this company, yes, it was slowing down, right? Q4 2022, Q1, Q2 2023, Q3 2023, we started to reaccelerate a little bit, but now we're back at 30% year-over-year growth. Yes, it's true. it was still easy year-over-year comparison. So in the future, the year-over-year comparison become tougher and tougher, but they are pretty confident that they can continue to grow at this pace. So it will become even more impressive when they start growing 30% year-over-year and the comps are getting tougher and tougher. Now, this company grows quite quickly, but it's becoming more and more profitable as well. Adjusted operating margin, I mean, Q4 2022, 22%, we're now at 38%, and the rule of 40, of course, you add those numbers up, is now at 68%. Best in class, best in class. If we look at Q4 expectations, they expect revenue between $667 to $771 million, beating the expectations here quite comfortably. And adjusted income from operations, $300 million at the midpoint, raised revenue guidance for the year to now just over $2.8 billion. They also said here that US commercial revenue in excess of $687 million, representing growth rate of at least 50%. I believe we started the year with at least 45%, then 47%, and now with at least 50%. Adjusted income from operations between $1.054 and $1.058 billion. And here adjusted free cash flow in excess of $1 billion. Previously, that was between $800 and $1 billion. And then, of course, as always, GAAP operating income and net income in each quarter of this year. Now, Emir here, you probably know him already, shared the following, saying that, well, they are still earning quite a lot of interest income despite interest rates coming down, right? You see this line right here continues to go up. So that's great. I mean, it's always great to have no debt and quite a lot of cash. And he also shared the following, that total stock-based compensation as a percentage of revenue is now back under 20%. So yeah, all is well in the Shire. And so right now, looking at the stock, we're going to make that jump back and above the all-time highs here, $46.63. Yes, RSI will show you on the weekly that we are overbought, but as I've shown you in the past already, a stock can stay overbought for a long period of time. Now, the stock will do what the stock will do, right? I would not be surprised if we see a lot of profit taking. I won't be surprised by that. Plus, you've got big US elections as well, so that might break the market or make the market as well. But overall, what we're seeing here is a company that is firing on all cylinders. If you want a pure AI play, of course, it's not cheap, right? It hasn't changed, right? I said it wasn't cheap before. I mean, I think we can all agree it wasn't cheap. It's still not cheap today, even after those great results. But this is a company that can grow, right? Everybody was laughing at Karp when he said, we're going to take the whole market. We have no pricing strategy, etc., etc. He was even saying, look, people will start to use competitors or so-called competitors, their products, and eventually they'll come back running to us. And that's probably what we're seeing right now. They are not spending that much more to grow all of this, right? This is basically them actually providing a solution to a problem. The customer adopts it, shows the whole world, because basically that's what AIP bootcamps are, that this is what we're doing, this is what we can do right now with Palantir, those are the results, that was the problem, this is the solution, done. If you're one of our competitors, if you do not do this, well, we're going to eat your lunch. So it's basically their clients marketing Palantir's product for them. Not too bad, right? Of course, they will still have to grow probably their sales team, right? But right now, this is quite a good spot to be in, to be honest. So that's all I've got for you in this first part. Of course, do share your thoughts and opinion down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.